Increasing foreclosures, increasing inventory, and decelerating appreciation. What the heck is going on? That's what we're going to cover in this monthly market report. This is for you if you are a real estate agent, a financial advisor, or an attorney interested in market data to help you advise a client. Or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data that you need to make an informed buying or selling decision or help your client do the same. We'll start this month with dispelling the myth that foreclosures are increasing. This is confusing to a lot of people. There are more and more headlines as more and more reports come out showing that foreclosures are increasing. And that's not incorrect. It's in fact true. Foreclosures are increasing. But what they're talking about in the headlines is that they're up 100% or 187%. And what they're doing is they're comparing foreclosures today versus foreclosures 2 years ago, which is when the foreclosure moratorium was in place due to the pandemic. So obviously, yes, foreclosures are way above those levels. But to give you a visual of what I'm explaining here, the red bars all the way to the right for the second half of 2022 and the whole of 2023 are definitely up over the pandemic years because foreclosures were practically forbidden back then. So we are not in a foreclosure crisis by any stretch of the imagination, even though on a percentage basis, they're up from where they were. So let's talk about the inventory situation and how that's looking. Here's a quote from the senior economist at Zillow. What we didn't expect, especially considering 7+% mortgage rates, was more new listings. And here is what they may have been talking about. Take a look at this visual from Realtor.com. In the month of August, for the first time in 7 years, which is how long we have data for the amount of new listings coming to the market, new listings actually increased. They didn't decrease like in every other year. There's a seasonality to new listings, and during this time of year, they usually fall off, but this year they didn't. Now, we only have data through August, but it will be really interesting to see what September looks like, because this could be a sign that people are ready to make the move. But if inventory is going to rise, how does this bode for home price appreciation? You're going to hear some talk later this year about there being a challenge with home values again. Let's kill that thinking right now. Here's a quote from the Wall Street Journal. Home prices aren't falling anymore. The surprisingly quick recovery suggests that the residential real estate downturn is turning out to be shorter and shallower than many housing economists expected after mortgage rates soared last year. Remember all those projections that prices were going to fall by up to 20%? Well, they fell for a little bit of time and then they came right back up again. John Burns Consulting had this to say. From January through August, housing demand stabilized, resulting in relatively stable home prices. By August 2023, national resale home prices fully recovered from the second half of 2022 and now exceed their April 2022 peak. So we had that fall off and then came back. According to Freddie Mac, overall, it appears the reduction in supply has outweighed the decrease in demand. Thus, housing prices have started to increase even as sales have fallen. And the part that Freddie Mac didn't mention and that I would like to add is that home prices have started to increase not only as sales have fallen, but also as rates have risen. And let's prove that with some data. You know I love to prove things with data. I showed you these last month, and here they are again. Look at the Case-Shiller, the Federal Housing Finance Agency, and the CoreLogic reports. At the beginning of last year, prices appreciated way too high, way too much greater than they should have. There needed to be a correction, and there was, the red bars, and now appreciation is much more on the historical norm. So those are 3 indices, and here's another 3 that I also showed you last month. They're all showing the same thing. As a matter of fact, the FHFA shows that in every single region of the country, prices are up. And if we go to Case-Shiller, every single of the 20 cities they cover, all 20 cities are up. And when people tell you, well, what about Los Angeles? What about Seattle? What about Phoenix? I heard Phoenix is getting killed. All of those cities are coming back, and each of them just in the last month are all up 1%. So yes, prices are coming back even in the hardest situations. Now, there will be some cities that are outliers. Austin's still getting pretty hard. New Orleans and Southern Louisiana still getting hit pretty hard. Boise, Idaho still getting hit pretty hard. But those are the exceptions. So let's not allow the mass media to paint a picture that everything is a big challenge just because of a few outliers. So now that we've established what the market has done, what happens from here on out? Let's talk about future home prices. We'll start with a quote from CoreLogic. High mortgage rates have slowed additional price surges, with monthly increases returning to regular seasonal averages. In other words, home prices are still growing or are in line with historical seasonal expectations. So what does that mean? If we look back at the last 49 years and take an average, this is how much prices have gone up each month. So what we can see is at the beginning of the year, prices go up as we're going into the prime buyer season. And then we hit the summer, the appreciation decelerates, but we're not talking about depreciation. The bars would be red if we were talking about depreciation. We're talking about deceleration. And what you need to know is that starting right now, and we're already seeing some headlines come out, people are going to misunderstand the deceleration of appreciation and will say the prices are falling. They're not falling. They're just not going up as fast as they did in other months, and that's related to the concept of seasonality. Now, I realize that some of you in markets like Miami, for example, are looking at this and thinking, wait a second, our summers are softer than our winters. This data doesn't make any sense. Yes, you're correct. Just understand what's on the screen is a national average from Case-Shiller, and the point I'm making is that the headlines will get it wrong as a result of what you see on the screen. With that said, here's another quote from CoreLogic that says, nevertheless, home prices are still expected to re-accelerate and reach a mid-single-digit growth rate by the end of the year, according to CoreLogic's latest home price index forecast. And here are 6 year-end forecasts that just came out. American Enterprise Institute, Zillow, Fannie Mae, the Home Price Expectation Survey, Mortgage Bankers Association, and the National Association of Realtors. NAR is the only one that is projecting that prices will be less at the end of this year than they were at the end of last year. Everyone else is saying prices are going to be going up. The average of all 6 of them is 3.3%. So in closing, what are we going to end up with at the end of this year? Well, a little less than normal appreciation. And that's a good thing after 2 years of crazy appreciation. Prices are settling in, wages are going up. Though both of those things have an impact on affordability, they have nowhere near the impact that mortgage rates do. So mortgage rates have to moderate for affordability to be really impacted in a meaningful way. And rates will moderate. It's just a matter of when. When that will be, no one can be really sure. But when it does happen, there are going to be a bunch of buyers rushing in all at once. And as I've said many times before, it's better to buy now and refinance later than to wait and take part in a bidding war. That's a wrap for the November monthly market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month. But before you go, if you're looking to purchase or refinance or know someone that is and would like a no-cost consultation with me personally, feel free to reach out and I'll be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks for watching. Bye for now.